Hi everybody, today I'm going to have a chat about how to pay off your loan a bit quicker. We normally find that clients get excited, buy their first house and then settle into a rhythm with their budget and then at some point turn to saying, hey, how do I get rid of this mortgage a bit quicker? Clients generally have one of two loans. There are a couple of other products. We have the fixed loan, which provides some certainty but does limit the amount of flexibility you've got with making additional repayments. And of course there's a floating loan, or also known as a variable loan. There are other products as well called revolving credit. I'm not going to go into massive detail there, but those products all allow you to make larger lump sums and pay off your loan quite quickly. But today I want to talk more so about fixed loans and how you can get rid of your debt whilst you've got a fixed loan. So if we have a look at some of the options available with the main banks, I haven't gone into detail on every bank, but just some of the main banks in respect of what happens if you've got a fixed loan and you want to start making additional repayments. So if we look at ANZ, BNZ and Kiwibank as an example here, they will allow you to pay an additional 5% off of the balance of your loan in a calendar year. So for example, if you've got a loan of $100,000, they'll let you either pay a $5,000 lump sum during that year, or you could take that $5,000 and divide that by 52 weeks and pay that in additional weekly payments. The likes of ASB, for example, they will allow you to pay an extra $500 a fortnight or $1,000 a month whilst you're on a fixed loan, and say Westpac will allow you to make an additional 20% in repayments whilst you're on a fixed loan. So let's have a look now at what you might save. Let's base a scenario on a loan of $400,000 at a rate of 4.5%, which is currently fixed, on a loan of say 30 years. Regular weekly repayments are $467. And you can make a lump sum payment of up to 5% of the balance. So 5% of 400 is $20,000 in that calendar year. By doing so, you save approximately $52,000 in interest and the loan is paid off 2 years earlier. Another scenario is where you can't do a lump sum, but you can increase your weekly repayments by the 5% allowable. So we take that $20,000 that you can do in a calendar year, divide that by 52 weeks, and in this scenario that's an increase of $384 on top of your standard repayments. So the loan repayments for this particular scenario are now $851 per week. And after year one, you would be in a similar position as we just mentioned before, having saved about $52,000 of interest and paying off your loan 2 years earlier. If you could actually continue to make these additional payments ongoing each week for the life of the loan, you could pay your loan off in 12 years approximately and save $215,000 in interest. So that's given you an idea of what you might be able to achieve by either lump sum payments or increasing your additional payments. Ultimately, the more money that you put into debt repayment, the quicker you'll pay off your mortgage. Certainly get in touch if you'd like to discuss your situation, and I look forward to helping you in the future if you'd like to look at getting rid of that mortgage a little quicker. Thank you.